Hello, everybody. Today is a different show. George is not around, but we got somebody who is more interesting and has very interesting views. And we thought that what would be useful is for us to have a rabbit hole on the currency board. And somebody who has been thinking about this for a very long time is actually on the show, Jimmy Silos. And glad to have you here.
Good to be here, Tinashe.
I'm looking forward to this. And I know you've been thinking about this for a very long time. But before we do that, Rufaro, maybe you can share what you and the guests are drinking. But I see you've got a whiskey bottle, wine.
Yeah. Well, you seem to be drinking something quite interesting today, which is rare. I mean, it's tea and comes in a ribbon.
Because you know where this came from. Thank you very much, Linda. This came straight from the UK, so I'm very lucky. And it's different kinds of teas, and I'm just gonna have the green tea. And the packaging is just marvelous. I mean, look at that.
And
It's beautiful.
does they say the proof of the pudding. So is it as good as
Smells right?
Fantastic,
Smells right.
fantastic.
I'm looking forward to this.
Yeah, so Jimmy, I'm a whiskey guy, so I'm carrying on with the Tam Du. But I'm gonna. There's a whiskey that I got from South Africa, and we should celebrate African brands, given that it was Africa Day
Yes.
earlier in the week, and so I've got another one of my toys. This is an electric wine opener, which I'm going to use to open this bottle. It's got an interesting Afrikaans name that, unfortunately, I doubt I can pronounce. I don't know whether you're better than me.
No, I'm not
with Afrikaans.
Nope.
Nope.
I wouldn't even give it a go.
But
I'll definitely give it a taste.
I have high conviction that it's a good one.
Can I?
Yes, absolutely, absolutely. Yep. That's your glass. Thank you very much. I'm going to try a little bit, but stick to wine. Okay, that's very generous. Thank you for coming.
Pleasure. It's great to be
Cheers.
here.
Yeah.
Great to be
Cheers.
here, Tinashe.
Yeah, no, thank you. Yeah. All right. So we're going to start on this. It's a rabbit hole on currency board. The real reason why we're doing this is just really to inform Zimbabweans and to inform the public on this alternative called a currency board. But probably, Jimmy.
And also to put it to the test, because I don't think everybody thinks it's a great idea.
Oh, yeah, no, there are many people who don't think so. But the reason why we have Jimmy is for him to actually maybe tell us a little bit more, because he's thought about this for quite some time. So maybe, you could frame a currency board to us, how it would work under your assumptions, and then, yeah, we'll put it to test.
Great.
Yeah.
So if you think about what defines the value of a currency, right? There's two main factors. There's the fundamentals, okay? And then there's sentiment. In days gone by, currencies were all backed by gold. But that's long gone. Every currency is based on the fundamentals of supply and demand for trade, etc., and people's sentiments, people's confidence, people's belief in the currency. So think about the US dollar, right? There's actually nothing backing the US dollar at all. But there's universal agreement that it's valuable. Even enemies of the United States,
Like Russia.
like Russia, like countries which call the United States the Great Satan, still agree that the US dollar has value. Okay, so if you look at it like that, so you've got fundamentals, okay, what's the supply and demand, what is the day-to-day transactional situation with the currency, and then you've got sentiment. Now, if the sentiment is positive, your currency will be more valuable than really is dictated by the current fundamentals, like almost like a share price. You know,
I like that analogy.
Mm-hmm.
if your sentiment is negative, the currency will be undervalued because versus fundamental value, right? And everybody agrees in Zim, everybody, that sentiment is negative on the currency. Even the policymakers said that. Even the president said it in his recent announcement. He said that we've got negative expectations which feed on each other.
Mm-hmm.
Okay. So I want to use another analogy now. Getting a bank loan, right?
Mm-hmm.
If you're going to get a bank loan and you have no track record, how long of a track record do you need before people would actually lend you money? Yes, right?
Mm-hmm.
So for us to build confidence in an unsupported Zim dollar will actually take years of consistent fundamentals, fiscal stability, tight control of money supply. Okay. But imagine, again, going back to the bank loan analogy, that you have a rich uncle who's prepared to put down a guarantee for your loan. Then how long will it take you to get your loan? If the guarantee is from a first-class bank, for example. Immediately, exactly.
Mm.
And this is what the currency board does. It immediately eliminates that negative sentiment by essentially putting a guarantee behind the currency, the guarantee being foreign reserves.
Mm.
So just to use a real-life example, Bulgaria. Bulgaria had a situation in 97 where they were much, much worse shape than us. Much worse. Okay. They put $600 million behind their currency, setting up a currency board. Within 10 years, they had more than 10 billion.
Mm.
That's impressive.
Yeah. And that's simply because you basically are giving the hold of the currency, the guarantee that for every dollar or every lev in Bulgaria's case, there is a certain amount of foreign exchange being held backing that currency. That's number one. And number two, that it's available on demand. So that's the undertaking.
But what if we just build the reserves within the RBZ at the moment? So right now we've got a Zim dollar.
Mm-hmm.
The RBZ doesn't have reserves. But what if we get these reserves and the RBZ just builds the reserves? And we don't need a currency board. We have the current system and we just build the reserves.
Okay,
Wouldn't that help?
So yeah, it would definitely help.
Mm-hmm.
But where the currency board takes that one step further. So what did the Bulgarians do, right? They were in a very similar situation to us, where they had low confidence. Okay, inflation was 1,000 something percent. It was just running away.
Mm.
What did they do? Not only do they honor anybody who comes to the central bank with their lev, for in those days it was Deutschmarks that they were backing their currency with, because it was prior to 99 and the euro coming in. So they firstly honor. Secondly, they had a weekly audit, independent external audit of the central bank every week, which they still do to this day. And the auditors confirmed that there are adequate reserves to back the currency.
Okay.
So that's how you
trust but verify.
Trust but verify, exactly. Trust but verify, and you've got that. So you then, what then happens? Think about the interest rate you get on a US dollar deposit. It's nothing. Eventually, people would prefer to hold Zim dollars because the backing is there. The backing is verified. Initially, they may test it to, hand in their Zim dollars and get the forex.
Mm. But why would a politician agree to that?
Okay, before we go to that, one of the comments we got on YouTube when we discussed the currency board last time was that, okay, fine, let's assume it's a great idea.
Mm-hmm.
Zimbabwe today has negative reserves. We're not actually starting from zero, we're in debt. So this rich uncle, to use your analogy, right? What would persuade him or her to give us this guarantee, given that there's a hole to start off with? How are we going to fill that hole to get to zero? And then how will we persuade this uncle to give us this guarantee?
Okay, so let's first look about what do you need to back to create a currency board.
Mm.
What are the mathematics of it?
Yeah.
Right. So the mathematics are, there's something which is called reserve money. Okay. So reserve money is the money which is available for transaction on a daily basis. So that's the only amount of money that anybody can come to the central bank with and say, I want forex. Okay. Now, it's not just quite as simple as that, because you also need to look at near-term maturities of government securities or RBZ liabilities, right?
Mm-hmm.
Because those are also going to come due quickly. So you need to be able to back those as well. So reserve money is about 28 billion, 30 billion, somewhere there, right?
Mm-hmm.
And then all these NNCDs, you know, for one, just for viewers who don't know what an NNCD is they are money market instruments that the central bank uses to suck liquidity.
Yeah.
Okay. Those would also have to be backed. Any short-term maturities of government debt would have to be backed. So plus or minus a reasonable estimate is 100 billion Zim dollars would have to be backed. That's a reasonable estimate. Okay. So you need to come up with backing for 100 billion Zim dollars, which at the current willing buyer, willing seller rate is about 300 million US. Okay. And we've got, the president himself said in his statement, $1 billion US of reserves, right?
Well, we don't know where those reserves are, so let's not take what he says, because we can't locate them.
So there's SDRs. I mean, that's public.
That's already been used up.
And we've got about 1.7 billion in US dollar deposits.
Those are deposits. Those are private deposits.
Okay. Yeah. But essentially,
we've got a $5 billion hole at the central bank. So if we were to look at the numbers, the only reason why you're saying 100 billion is purely because we haven't monetized that 5 billion gap that's actually at the central bank. Because if you monetize that, that becomes due and payable.
5 billion US dollars or 5 billion?
Dollars. 5 billion US dollars. It just hasn't been monetized. So how would you fix that quandary?
There's no $5 billion gap at the central bank.
No, it's there.
Okay. What is the basis of your assertion?
The central bank has a debt of 5 billion.
That who do they owe this money?
They owe this money to, number one, what they called blocked funds. They owe Afrexim Bank about 1.4, which with interest is now coming out to about maybe 1.6 now. And then 3 billion is blocked.
So okay, is this
funds? So that becomes, so that's where the 5 billion.
No, but okay.
That's actually sitting on central bank balance sheet.
In terms of our national debt, I think AFDB was talking about a number of like 19 billion.
Yeah,
is that 5 billion not part of that 19 billion, which is just national debt?
It is, but right now it's sitting on the RBZ balance sheet.
Anyway,
so it is actually due.
Let me help there, right?
Mm-hmm.
Whether or not there's a 5 billion debt of the RBZ, right? Mm-hmm. The liability that you are covering. So when you issue a currency, when a central bank issues a currency, that's like issuing a liability, right?
Yeah.
Okay. The liability that we are talking about covering is their Zim dollar liability.
So backing the Zim dollars that are already in issue. So it doesn't matter what the US dollar balance sheet looks like and what is owed. What we're saying is we want to back the Zim dollars that are in issue.
That's it.
And I'm saying that the Zim dollars that are in issue is not a correct reflection. Because if the central bank was doing its proper accounting, that 5 billion would have been part of the money supply. That's number one. Number two, there's the auction rate. They're using the auction rate to suppress the money supply, right? Because the actual number that we know is 450. The actual exchange rate right now is 450. But because right now the exchange rate that they're using is an auction, and it would have moved to 2. So the movement from I think it was 174 to 284. That in itself is an increase in money supply.
Yeah, but okay, I think we are at risk of getting lost in the minutiae.
No, but it is important.
I think the big
very
picture,
important.
The big picture,
it's an important issue.
Whether the number is 100 billion or 200 billion or 500 billion, your point still stands that it needs to be backed.
Yes, yes. But what I want to make the case is that it's much nearer 100 billion than the 500 billion, because these other liabilities that may or may not exist, right? Okay, they are not Zim dollars. What we're trying to do here is rescue the Zim dollars.
Sanitize the Zim dollars
We're
that are
trying
already
to
in issue.
sanitize Zim dollars. So essentially, there are many ways to skin a cat, right? But essentially what we want is a situation where somebody who's holding a Zim dollar can access Forex at an official exchange rate with no issue at any time. So Afrexim Bank, maybe they owed it 1.6 billion, right? But that's not Zim dollars. They don't have a single Zim dollar to their name, Afrexim Bank.
Yeah.
So they can't come near the currency board and claim anything.
So you're saying what we owe in US dollars, we still owe.
We still owe. I'm not saying it eliminates the US dollar.
Okay, all right. Okay, I think
we're just talking about the Zim dollars.
The Zim dollars.
Yes. So what that does, what it does is it sorts out all the Zim dollars. And I reckon the number is probably, if you take NNCDs and short-term maturity of government debt, you probably look about 100 billion. Okay.
Maybe more, but
maybe
I think.
More, right. And then the other thing you are flexible on is the exchange rate that you back it at, right?
Okay,
you don't necessarily need to choose the win buy.
So you don't want it to be a fixed exchange rate. You want it to be a flexible.
I think ideally, because if it's flexible, it makes it sustainable, right?
But that defeats the whole idea of a currency board.
So what I'd rather do is let's park that, because that really is a secondary debate.
Issue. I think so.
Yeah,
I think
let's park that.
Let's break, and then we can come back and continue this discussion.
Perfect.
But yeah. Welcome back. This is it's becoming very heated, and this is the sort of thing that we like. So I'm going to push back a bit on the currency board.
Please do. Try and tear it apart.
So what you've explained so far, it's the mechanics, right? And what I want to understand is what happens when the guarantee or the guarantor, where does it sit? Where is he? Who's accounting the transparency? So it could be something that we try out, like we tried dollarization, something that we try out for 5 years and then decide that, well, it's not working. And then we just flood the market with Zim dollars, and we're back where we started. So how are you going to guarantee, how is this a better solution than dollarization that we've already gone through?
Okay, so the first issue with dollarization, right?
Yes.
Is that we are under sanctions by the US government, right? So straight away we're using a currency, and yet we're under sanctions.
But earlier you said, American enemies can still have reserves.
Correct, they can.
Why can't we?
We can, but
it's not like we don't have the US dollars. We've got the US dollars.
You can wake up one day like Putin and realize that $640 billion of your reserves are no longer available for you. So there are those challenges of using somebody else's currency
Currency,
who
that's it.
you might not necessarily always be kosher with.
That's it. And so the first point really about is sanctions make it practically difficult, because what a lot of people don't know is that there was sometime in about 2014, 2015, there was, because you know the sanctions are quote unquote targeted, right?
Yeah.
Okay. Now, it was quite easy for a bank before 2014, 2015 to check if somebody was on the sanctions list or not, until there was some kind of judge in the United States who then decided that not only do they need to make sure that the person they're dealing with is not on the list, but they also need to make sure that they are not acting on behalf of somebody on the list. Okay.
Which is like proving that that ghost over there isn't actually over there.
Exactly. So there's no possible way a bank can actually do that. There's no way that they can know that I'm not acting on behalf of X, Y, or Z, right? When I ask them to do a dollar payment. And that's why suddenly dollar payments, and that's why we lose correspondent banks and all that sort of issues. Those came on big time after that.
Although to be fair, I think for the most part, what's happened with those correspondent banking relationships is, you know, sometimes as Zimbabweans, I think we're given to taking ourselves too seriously. That the reality is that we are so small. We're such a tiny account for most of these banks that if somebody reads something on Bloomberg and they think that we are a little bit riskier than possibly we actually are.
Yes.
It's just so easy to say, you know what? It's just shut down. We're not making any commissions.
Yes, let's
just shut it down. It's
so
much easier for a lot of managers to cover their bottoms by saying just shut down.
Okay. There's another very practical reason to use your own currency rather than a board, rather than the dollarized. It's the simple mechanics of a dollar. A dollar is actually a lot of money. A dollar is 15 rand, right? Yeah. So it just creates this psychological distortion in the market where people think a dollar is not a lot of money when it is a lot of money. So it's much easier, even if you in the background have backed your currency with dollars, it's much easier and much more practical to have a reasonable exchange rate to the dollar so that you have reasonable prices, etc., rather than people rounding up to the nearest dollar and all that sort of stuff. All your change issues go away, all those type of problems go away if you.
But how is the informal sector managing? And they're doing so outside of the financial services sector. And we hear between 2 and 3 billion US dollars is in the informal sector. And they're managing with US dollar cash.
They are managing with US dollar cash. So I'm not saying it's impossible.
Okay.
You know.
But it's not ideal.
It's not ideal.
And I think at the end of the day, the consumer suffers and the volume of business is less because it's just harder to do certain transactions.
But the market is telling us that they would prefer it being US dollars,
that's
right?
That's it.
No. But what the market is telling us is the current unhinged, unanchored, constantly devaluing Zim dollar.
That's where I'm going.
Is worse than US dollar cash.
Where I'm going is right now there's more money, more US dollars in the informal sector than in the formal sector.
Correct.
And
there's more US dollars than we've ever had, by the way.
Yes, exactly.
In the whole economy.
Whole economy. Yeah. And you're saying that a currency board will reconcile the two.
Correct.
And those in the informal sector will suddenly find it, and by the flick
not
of
suddenly.
Okay.
Not
how is it going to work? Where these people with their US dollars, we term it the National Mattress Bank, are certainly going to move.
I like that National Mattress Bank. I like
the National Mattress Bank, and its deposits have been increasing. It's the only bank where deposits have actually been astronomical consistently.
In real terms.
Yeah, in real terms.
How will money move from the informal sector to the formal sector?
Okay.
With a currency board.
Yeah. So what a currency board creates is complete fungibility. Right.
Okay.
So you're familiar with fungibility.
What do you mean by fungibility?
Okay. So you're familiar with fungibility from a stock exchange point of view.
Yeah.
Where something is listed in New York, London.
You can move it around different markets.
Right? So essentially what happens is that in a currency board, every Zim dollar that exists is backed. And beyond the backing, so we in theory have the backing, right, with the SDRs plus the government reserves. We in theory have the backing. But the currency board takes that one step further to say, not only are we backing, but if you come to us with your Zim dollars, we will give you your Forex. And we will retire, because this is where the key of the currency board is that when you hand in your Zim dollars to the currency board, somebody goes in with $1 million. Let's say the exchange rate for ease of
1 to 10. Yeah.
yes, 1 to 10, they millions of dollars get $100,000 US.
Mhm.
Those millions of dollars go out of circulation. They're gone.
Mm.
That's how you always maintain your balance.
Okay.
Right. And then, okay, if you need them dollars, you can't just get them from the central bank. You have to hand them back forex to get some dollars.
Okay.
That's
All right.
that so that's that fungibility that I'm talking about. So essentially, what it does, it's as close to magic in finance as you get, right?
Mm-hmm.
Because you've basically converted all assets and liabilities in the economy into de facto forex.
Mm-hmm.
So there's no real difference between forex
and your local currency.
And your local currency.
Okay, so to simplify it even further, what you're saying is the 2 billion that's in the informal sector, if for whatever reason they now trust this currency board, and we'll get into why they would trust this currency board. If all that money, if they were to go to a bank with 2 billion, what would happen is the 2 billion will become reserves, and Zim dollars will be released at whatever the fixed rate it would be.
Correct.
But we assume that something then fundamentally changes in the market, and those people then decide, no, actually we don't trust the system. We want our money back. They'll be able to walk into any bank and get their money back.
Correct.
And you're guaranteeing that would happen. So every Zimbabwean cannot believe that.
Correct.
So
I agree with you.
How are you going to ensure that is exactly what will happen?
So that's what the Bulgarians did by having the weekly audit.
All right.
So firstly, they delivered in practice, right?
Mm-hmm.
So when you walked into a bank with your Lev, you got your Deutschmarks. That was number one. And number two, they had the weekly audit. And eventually, people realized that I actually make more money holding Zim dollars or holding Lev.
Yeah.
Because I get a better interest rate on Lev. Because as you said, I think on Twitter, the interest rates will become market determined. The central bank can't influence interest rates in any way because they don't control money supply anymore. Money supply is controlled by supply and demand, right?
Yeah.
Which then the interest rates also then become a derivative of that. That's another nice thing about the currency board. Mm-hmm. So your interest rates would actually encourage people to hold local currency.
Local currency. Okay.
But that would only happen over time. Initially, the relief for the consumer will be that prices stabilize overnight. That's the relief for the consumer. Mm-hmm. And then actually they'll start coming down because, a lot of people are doing forward pricing, right?
Yes.
So prices will actually start. Firstly, they'll stabilize, then they'll come down. That's the relief for the consumer. As you know, virtually every single person in Zim, the day they get paid is the day they switch. Is the day they switch, right?
Yeah, and also the National Mattress Bank, in as much as it's great for preservation of value, it has some costs and challenges, right? You can wake up one day and your money's not under your mattress.
That's it.
Because somebody's gone off with it, and there are various other challenges. For example, today, if you have a Zim dollar, Zim switch, or even Visa or MasterCard, right, you can't go online and buy tickets to fly to Joburg. But if our currency was fungible, you could go online and pay for your ticket. So there's all this utility with a functional currency that would encourage people to bank. Right? Today, that utility is not there. Right? The Zim dollar is useless in a lot of everywhere outside Zimbabwe.
Okay. So next question I have is, where are these reserves? So the 2 billion moves from the National Mattress Bank. Where does it go?
Okay.
Literally, where does that?
Yeah. So it depends on the fine details of the structure, but it would go into the currency board's account.
Okay.
So if you take the Bulgarian example again,
yes,
they set up the currency board as a division of the central bank with its own account.
Okay.
And central banks bank with other central banks. Right?
Yes.
So in our particular case, the dollars are held at the Federal Reserve Bank of New York.
Yes.
Okay.
Okay.
And the dollars would be there.
All right. Okay. All right. Or ADB or wherever.
Yes.
Okay. All right. And then you have an auditor that ensures that whatever Zim dollar is in, Is exactly. Okay,
Correct.
that one, that's clear. Then what happens to the FCA accounts? People who are holding, I think, the 1.4, 1.5 billion dollars.
No change.
No change.
They can switch back and forth as
they can
as they
switch back and forth.
Mm.
And
To
you're
the
saying
extent that those account balances are real US dollar.
okay,
account
all right.
balances.
Well, let's assume that they
and,
are.
and there's
Okay.
good reason to believe that they are, largely because banks are not defaulting on domestic nostro transactions,
Mhm.
right? If they were not real US dollars, banks would not be able to honor domestic nostro transactions, right?
Okay, all right.
Because what will happen is, if I receive money into my domestic nostro, I will tell my bank, pay X, Y, Z outside the country with these invoices, right?
Yep.
And they don't default,
Mm.
which means that that money is actually there. If suddenly I get excuses, sorry, we've got technical challenges.
And then there's a problem.
Well,
then
you're
there's a
suing the
problem.
bank. At least the good thing is you're suing the bank. You're not suing central bank,
Yes.
right?
yes.
Because it's the bank that's holding the FCAs. But with those FCAs, would they still? So they will still be able to trade, go in and out.
Correct.
Why would they retain those? And what makes the currency board attractive so that they switch?
So
Besides the interest rate, it's just the
rate.
interest rate.
Yeah,
that
it's
suddenly.
No, it's
Then
not,
what's
it's not
gonna-
just the interest rate, it's also the counterparty. So it's who do you trust more, right? So if this currency board is stood up properly and the underwriter is credible, right?
Mhm.
So you've got a local bank holding an FCA that ultimately
That's a good point.
they can wake up tomorrow morning and be told by the Reserve Bank to change those US dollars to Zim dollars at a particular rate, and they will be powerless to say no. Whereas if your money is in the currency board system, there is a framework which is not subject to the whims and caprices of the central bank.
Maybe can you speak to that?
Yes.
What happens if we change the law again?
We can. You see, the problem with when you're dealing with a sovereign state, right?
Yeah.
That's what the word sovereign means. They can change the law,
Okay.
and they can always change the law.
All right. Okay.
And that's why it's not going to be that suddenly let's say we've got 2 billion in the National Mattress Bank.
Yeah.
And we go on and market the currency board for 3 months, and then suddenly the 2 billion is going to come into the banking system. That's not going to happen.
It's not going to happen. Okay.
It took years for Bulgaria to get up
Okay.
to the 10 billions, 12,
All right.
whatever they've got now. It took years of consistent
accounting,
etc., etc.
But
but what happens for us in the short term?
Mhm.
In the short term, this exchange rate is killing the country, right?
Yeah.
In the short term, we immediately stabilize. That's what happens in the short term. The National Mattress Bank will continue operating. It will continue booming. But in the short term, at least we stop the bleeding on the
exchange rate.
On the exchange rate. We stop it, and we stop it immediately.
All right. So let's take it further. The reason why the exchange rate is going where it's going is because of what's happening with our deficits. What happens under a currency board? What happens to government deficits? What happens to money that we're taking from the exporters, for example? We take 40%, and that's actually helping our subsidies. We subsidize Zupco. We subsidize.
I don't think helping is the right word, but I'll let that go.
Yeah. Yeah.
What happens? What happens with the currency board?
Yeah. So in an ideal scenario, and you're never always going to get an ideal scenario. In an ideal scenario, you don't need any surrender requirements because your currency is fungible, right? If you want to maintain surrender with a currency board structure, to maintain the balance, you would have to actually put that surrender into reserves and give the guys the Zim dollars. But then under the currency board arrangement, they could come back the next day and get their money back, right? But so surrender doesn't make sense under currency board.
So let me simplify the argument. Government buses, Zupco, fuel is subsidized, and it's being subsidized by the exporter. So how government looks at the retention scheme is it's actually a subsidy on the economy, and it's helping them because we only collect about, let's call it $3 billion US dollars, but because of the retention, government can now spend up to $4 or $5 billion dollars
in hidden subsidy.
It's hidden subsidy,
yes,
and then once you have a currency board, you're taking away. That's going. That's not going to be a suitable arrangement for the politicians.
It may not
how
be
do
a
you
suitable
read it?
arrangement. It may
Yeah.
not be, right? So
Yeah.
you now we're getting
So how
into
do you ameliorate?
why
How
do we
you-
not want a currency board if I'm
Yeah.
a politician, right?
Mhm.
Why would I not want a
Because
currency
you
board?
can't be naughty.
Okay.
But
So-
you have to speak to that.
Yes, you
Yeah.
have to speak to that. So the question really is this, right? Which is going to win you more votes, right?
Mhm.
Just brutally as a politician. Which is going to win you more votes? Subsidizing Zupco and having the exchange rate continue to go so that it's 5,000 by the election, or immediately stabilizing the economy, bringing prices down, and stopping the subsidy on Zupco. Which wins you more votes? And that's the decision a politician can make. You know, if you want to go into an election where every single citizen can walk into a bank or bureau and get foreign currency whenever they want, right? Where prices are stable and the economy is, because the underlying economy, what people forget is the underlying economy is actually performing very well. It's actually performing extremely well. That's why the National Mattress Bank deposits are growing. Okay, it's
Well,
because
one could argue it's remittances.
No,
it's
I
partly
would push back
remittances.
on remittances.
It's partly remittances, but the remittances are going into the domestic economy as well, right? So the domestic economy, the underlying economy, if you go into downtown, right, it's boom time in downtown, right? They don't know what the Zim dollar is. They're not interested in trading in the Zim dollar.
Yeah.
But trading is happening, right? It's only the what is your formal economy, which is highly Zim dollarized, which is really bleeding right now. Your civil servants and your formal businesses, which are bleeding, your exporters are bleeding. All those guys are bleeding.
So, Jimmy, let's simplify the argument for the politician. You're saying to the politician, your subsidies were, let's call them $2 billion US, and you're saying that will go away, sure, but what you're going to gain is stability in the economy. Shelves will be full with goods and
at affordable prices.
Is that your promise?
Yes.
What if it doesn't happen? What if we have a currency board and the next day, and politicians are short-termist, right? And within a month we're not seeing any change.
Okay.
What would happen?
So let me use an analogy here, right? You hire an engineer to build a bridge, right? The engineer does his calculations. And he tells you, okay, this is how much cement, this is how much steel, this is how much XYZ you need, right? Are you going to tell him what happens if the bridge falls down tomorrow? Because what I'm saying is the currency board is
economics is a social science. It's not like building a bridge. It's a social science.
And this is where
it's a social science.
The currency board is slightly different in the sense that we're not talking about a social science. So there's a social
accounting.
Science.
It's got a debit and it's got a credit.
Yeah.
So you can't fudge it. Once if you set it up with a proper framework,
you can't fudge.
You can't cheat. You can't fudge. It will work.
That's it. So it's the part of economics which is analogous to building, to engineering. You engineering a currency board solution. In the same way, in financial markets, you can engineer a riskless arbitrage, right?
Yes.
You can take 2 or 3 instruments and put them together and come up with an instrument which is actually riskless. And you've engineered it.
Okay.
And there's no possible way it can fail.
Are you willing to put your neck on the block?
If it's properly engineered, as I said,
all right.
There's no way it can fail.
Okay.
There's absolutely, because you've got it's basically the same, it's analogous again to getting a guarantee from a first-class bank for a loan. Yes, there could be a nuclear war and all hell breaks loose.
And we're all doomed.
Anyway, right? But
the mechanics
are bulletproof.
Okay.
And that's so one of the things which again you can tell, if you were talking to the president trying to sell him a currency board, he's clearly worried about currency manipulation.
Yes.
Currency board is impervious to manipulation.
Explain that. Or maybe let's hold on for a moment because becoming very, very, very interesting. Thank you very much, viewers. Let's break for a minute or so, and then we take it from there.
Sawira huya timborangana timboronga tichine mkana handirambe isheni novuma kana mati yangu nguva yakwana sawira huya timborangana timboronga tichine mkana daita isiva ramangwana taingovunza ndewani mukana dainda isiva ramangwana taingovunza nderani jana sawira uya timborangana timboronga tichine mugana sawira uya timborangana timboronga tichine mugana daita isiva ramangwana taingovunza ndewani mugana dainda isiva ramangwana taingovunza nderani jana sawira uya timborangana timboronga tichine mugana.
Thank you very much, viewers. And I think to just continue the argument, I think we're falling in love with the currency board, but we have our reservations.
Please, and push them hard. Push the reservations hard.
So the one reservation is, why not just reform the RBZ?
Okay. So remember we talked in the beginning about getting a bank loan. Right?
Yes.
Running a currency is effectively, because you're actually issuing what is in a sense debt, right?
Yes.
You're issuing a liability on the central bank. Currency is a liability on the central bank, right? Now, remember we talked about how long would it take you to get credibility
in the market.
Yeah. To be able to borrow unsecured. Yes. It's the same with a currency. You could reform the system, right? And fix the auction, fix the interbank markets, get a proper running foreign exchange market, right? But how long would it take you to actually have confidence in the Zim dollar?
Yeah, it'll take a long time. I think there's an interesting axiom about reputation, which is, I might not get it right verbatim, but to paraphrase, reputation is earned in drops, and it's lost in buckets. So, and with what we've done with our reputation vis-a-vis the local currency, we've lost buckets, and it's going to take us. I mean, I did a poll on my Twitter handle asking, how long it would take for Zimbabweans to have faith and confidence in the local currency, if we started doing the right thing today. And more than half the respondents said more than 10 years.
Okay. All right.
So the currency board, just to build on that, is the shortcut to confidence.
Okay.
And so what do the politicians give up? They give up the right to print money when they want. What do they gain? They gain stability overnight, right? So think about the current situation. Okay. We've actually got a relatively healthy fiscal position. Okay. Our problem really is on the monetary front.
Yeah.
But fiscally, we're quite sound. Okay. But the Minister of Finance cannot freely spend his own tax revenue. Because imagine, like, when we pay VAT, billions of Zim dollars go to Zimbabwe. Imagine if the next day the minister decided, okay, let's catch up with payments to people we owe money to. What would that do to the exchange rate?
Yeah, it will depreciate.
Yeah, I think one of the things that's lost in the conversation around our currency problems in this country is the power of faith and confidence to actually raise money. So I'll give you a fun fact. Some time ago, I don't remember the year, but interest rates in the US were 0. And this blue chip company that you might have heard of called Coca-Cola took the opportunity to raise 100-year paper at 0%.
No way.
They raised debt,
Wow.
US dollar debt,
100
at,
years.
which is due in 100 years at 0%, right? Because they enjoyed the faith and confidence of the market, and interest rates in many parts of the world, like Germany and other parts of Europe, were negative. They were able to raise money at 0%.
They were able to raise money. That's very interesting.
So if you enjoy the faith and confidence of markets, people are at a place where they think that your currency is stable, right? There's nothing stopping a country like Zimbabwe raising $10 billion, $20 billion.
Would you agree to that?
Yes, I would agree to that.
So I want to speak to FDI and portfolio investment. Would you say that a currency board will engender or attract FDI? Would it help us resolve our debt problem? Because we've got about 20 billion that we actually owe.
Yeah.
What's the interaction between international investors, international creditors, and currency board?
Okay, so the currency board ensures that whatever money is earned is fungible with forex, right? That's the first point, right? So from a government perspective, that means all their tax revenue is de facto foreign exchange, 100% of their revenue.
Okay.
Right. So that's a big win for government. That means they can freely spend their money when they want. They can pay as many contractors as they want. They can pay as many farmers as they want on any given day. At the moment, they can't do that, right?
But it's not enough, right? Because we only collect 3 billion. So the way I understand it, if we have a currency board, there's the 3 billion, but we're actually spending closer to 4.5, including the subsidies.
Yes.
Yeah,
so
but
the subsidies have to go.
But if we can raise money, right, we can spend
but
more.
It's not going to happen overnight.
No, it's not going to happen overnight.
So what? To a politician, it's like your solution is great in the longer term, but I cannot afford not to have that 1.52 billion US dollars. That was, well, you're right. It was happening in the monetary system, but it was useful as far as.
But I actually useful. Are you winning votes? Right.
No. But even before we get there, I want to push back on this idea that they're collecting only 3 billion or 2.5 billion, and they're able to spend 4 or 5 billion. What's actually happening is they're not spending.
No, it's a shakedown.
No.
True.
But
they're spending it.
No, they're not. This is what the point
is heavily subsidized.
So allow me to unpack this for you. So, if in real terms, the government, from a revenue or tax perspective, is collecting the equivalent of 2.5 billion US dollars, right? To the extent that they are printing or expropriating money from exporters, and it appears that they're spending more, they're actually not spending. What's actually happening is that a significant portion of their spending, particularly their wage bill, right? There's a wealth transfer happening. So where a civil servant before this extra money was printed was effectively earning $200 US a month, right? By printing this extra money to build that road or to pay for X or Y, they basically
you should drink more wine because that's a very
they're basically
one.
Paying that guy $100 instead of $200.
Yeah, that's an interesting one because, and I want you to expand on it, how the currency board relates to wages, and more specifically, civil servants' wages.
So I'd like to backtrack a bit,
okay,
and just deal with the issue of the politicians, right?
All right,
because you can kind of use a strategy of money printing to a certain degree to help yourself in an election, right?
Yeah.
And that's been used across the world, right? But we've run out of runway on that particular strategy because even the tiniest amount of money printing in Zim causes a disproportionate rate
expectation
and a disproportionate impact on prices. So literally, the government is walking a tightrope now. They have to be so careful every single day how much money they're putting into the market.
They have to suck it out. In fact, you make a very good point. That's why they were going after the banks, because
that's why we have this instrument, this NCD at 0%. I mean, you don't have that anywhere else in the world.
Yes, but it's not effective because what happens is this, right? In the morning, money is injected. During the day, it spins around the economy, causing inflation. In the evening,
They take it out.
they take it out. But you achieve nothing.
Well, you've recorded the it's about recording the reserve money, right? Because what they will say is reserve money has not grown.
Reserve money has not grown.
Never mind that it actually grew during the day.
Yes,
but you're right.
But there's a thing called the velocity of money that actually that's inflationary.
Yeah.
So,
okay, but can we go back again to labor, wages, and the currency board? What's going to happen there?
Okay. So let me make sorry to just take one last point on so from a political perspective, the calculation is which is going to win me more votes, as we said earlier. Is a stable growing economy, which I can achieve literally in a week or 2 weeks, or is it trying to play games and suck out money at the end of the day and all that?
But I'm going to push back. I'm going to push back on that. We're importing. We've just heard this week, I think, we're importing 400,000 tons of maize. How will the currency board react to all these imports? Because the current system, we know, if we're importing, that's going to affect the exchange rate. We know that. And then once we have the currency board, that money will just simply not be there. Are people going to starve because we just don't have the money?
Okay, so
how are we going to import?
The beauty then is that once you've got a currency board, your currency is completely fungible, right?
Yeah.
So at the moment,
not enough currency to import.
So at the moment, and I mean that's the open question whether or not there's enough, right? But at the moment, think about this, right? If the government decides to print money to import maize, what will happen to the exchange rate?
Yeah, it goes one way.
It goes one way.
Yeah.
Okay, and so therefore, how much does a bag of 10 kg roller meal cost right now?
$10.
$10, right? So
or cheaper than that.
Right.
Might be confused.
Okay.
It might be $5.
10 kgs. No, it's about $5.
$5, yeah.
It's about $2,000, right?
Yeah.
Okay. So $5, and I think an average family needs about two per month, right? Okay. So you're importing maize, which is as part of the household budget, is costing what percentage? Do you reckon?
Household budget is probably
say $500.
$500. Yeah, it's lower than that now. But
okay, say $300.
$300. Okay. Yeah.
So 10 out of 300 is 3% of the budget. So you're going to import 400,000 tons of maize. You're going to print money for that. You're going to probably drive the exchange rate God knows where, right?
Could be worse. Yeah.
God knows where, to save somebody a little bit of money on 3% of their household budget.
Okay.
And then there's another aspect. There's another answer to your question as well, which I think is very important, which is there's a tremendous amount of capital in Zimbabwe today that's trapped. So what do I mean by that? I'll give you an example, right? If somebody owns a property worth $150,000 US, right? And it's their nature to be extremely conservative and not color outside of the legal lines, right? They would love to sell their property, but they won't because the legal framework does not allow them to earn $150,000 US worth for their property. So that property is effectively not on the market. And there's a guy sitting in Joburg or London who's a Zimbabwean who's doing well, who also wants to buy a property worth 150,000 in Zim, but they have the same conservative mindset. And the idea that they could wire money and leave a quarter of it on entry because the exchange rate doesn't make sense is anathema to them. So they're not even looking at property in Zim right now. They're just saying, look, I'd love to buy a property in Zim, but the framework doesn't allow this. So if you have a currency board, right, that guy in Joburg or London is going to be able to wire money to their bank and buy this property. And the guy who's sitting on it, who couldn't sell it, can actually. And so you unlock all this capital that is trapped in Zim right now.
I think that's clear. What's not clear, and
that capital will allow us to import all these things that we might be short of. So that's
Well,
another answer to his to the question you posed to him.
It's so the mechanics is very clear, but if you have a shortage of cash, you still have a shortage of money. If you don't have the money, you don't have the money.
Yeah, if you don't have the money, you don't have
If
the
you
money.
don't have the money, you don't have the money.
And that's where we go
But-
back to my original point.
But where inflation is useful to a politician is it's an indirect tax.
Yes.
So it's if you don't have the money, well, you could find the money by
Yes.
taxing people
Yes,
through
indirectly.
inflation.
No, I beg to
indirectly.
differ. You know what inflation
So-
does? What inflation does is if you've got a bunch of people, like 10 people that you're paying, right? And you occasionally cheat by printing. What you're simply doing is if I owe you $50 and I owe you $50,
No,
and
you're kicking the can down the road.
no,
You're
no,
quite
and I
right.
print his $50, I've basically paid you less than
Stolen.
$50.
Yes, exactly.
So you're not creating more money.
No, what I mean is, it's with an inflation tax. It's if I was supposed to import 400,000 tons of grain and I didn't have the money under a currency board, I won't have the money. Now, what he's saying is, yes, you don't have the money, but you're minimizing the damage to the entire economy,
Correct.
which is right. So you still don't have the money. You will find it very difficult to import, but you're just minimizing the damage in the economy. And I'm saying for the politician, that's door A. For the politician, door B says, we don't have the money, but we can introduce inflation in the economy and we will get the money and we'll be able to import
Yes.
400,000. Never mind that the inflation will hit next month, will be much higher and would have destroyed the economy. But as far as the politician is concerned, people will not starve.
Yeah, but here's the thing.
If you've read Casino Economics with Gideon Gona, that's the justification of printing money. It's I will not allow people to starve.
Yeah, but
So how are you going to answer that?
Okay, so my point is this, right? If you have a stable economy with low inflation, you certainly got an opportunity, as we've seen in the States and in Britain and so on, where they've enjoyed low inflation for decades, high confidence, etc., etc. They've suddenly printed a hell of a lot of money for COVID, right? And they're now starting to pay the inflation price.
Yes.
Okay. But in Zim, our market is so sensitive to money creation.
It'll be days.
Yes, it's days. It's
Okay,
days.
the impact will be days. Okay.
The impact will be days. So the politician
I'm
has...
sorry.
And
so we have to.
also-
So sorry, it's almost time.
this
So
is-
I just want you to, for 2 minutes,
Uh-huh.
to address the wage and currency board issue.
Okay.
What
So-
will happen to wages?
Yeah. So
Why should Labour support currency board?
because they can then walk into, firstly, number one benefit for labor is price stability, right?
Yeah.
That's number one. Number two is then they can walk in to a bank or a bureau and get forex for their wages every month if they feel like it, with no issue.
Okay. All right.
You know. So
they don't have to
there's-
deal with that shady guy on that corner who occasionally disappears
Yes.
with their hard-earned
That's it.
Zim dollars.
That's it. And who's charging them every month? It's a higher price, right? This is going to be a fixed price. It's guaranteed.
Okay. Fantastic.
Okay. So the main objection that I've heard to currency board is that it can't be done because we don't have the reserves. Okay. So I'd like to just spend a minute addressing that.
Sure.
Sure.
So if we say 100 billion is what's required, right? It's definitely possible because right now, in real terms,
Okay. So let's call it 250, or let's call it 300 billion. Let's argue around 300 billion Zim dollars are in the economy.
It doesn't matter what the number is.
No,
I think in
it's-
principle,
it's-
I think
it's
in principle the
important we
solution
get
matters.
closer. Let's be pedantic because there's as of March it was $524 billion our money supply, and half of that will be US dollars
yes,
at
okay.
whatever rate.
But what you don't, so if you think about the balance sheet of a bank, right? You've got loans on the asset side.
Yeah.
You've got loans and you've got cash in the vault and you've got deposits with the central bank.
Yes.
Right. So the currency board only has to take care of those second and third elements. The loans are your business as a bank.
But then automatically those loans, the issue is if you're given a loan, right, you can demand US dollars on the basis of those loans. That's why I'm saying let's look at it as immunizing the entire.
No, but you don't have to. You don't have to do it. Because this is quite an important point, right?
Okay.
Because you don't have to. That's what makes the currency board feasible. Because you only have to back what people can go to the central bank with to demand forex. And a bank cannot take a loan to you or to me and go to the central bank and say, I want forex for that loan. They can only go to the borrower and say, repay the loan. Okay.
But the borrower can get a loan from the bank and demand US dollars. So if I can borrow from you and go to Rufaro Bureau and demand US
So
dollars.
you're absolutely right. The banks do create credit, but the banks have to. They have demand deposits. They have a liquidity profile where
they have to manage that.
Money market instruments become. So they have to manage it, right? Because eventually the depositor is going to want his money.
Okay. So I think we're. I'm going to give you the last minute. Explain that so that it's very lucid and simple for people to understand.
Explain the issue of the banks.
The reserves and the banks.
Okay. Yeah. So essentially, as we said, a balance sheet of a bank is loans on the asset side. Obviously, they've got equipment and property, etc., etc. That's illiquid. But on the liquid side, the more liquid side, there's loans, there's deposits to the central bank, and there's cash in the vault.
Yes.
Right? And we talk about the domestic currency balance sheet, right?
Yes.
So on any given day, the only amount that they can take to the central bank and demand forex for is either the cash in the vault or their liquid assets with the central bank. So that's why we say we have to include the NNCDs in the equation. Okay. Because the bank can take those to the central bank and get some dollars for that. Okay. So but the loans are now, because your currency board de facto makes everything forex. The loans have de facto become forex assets for the banks, but all their deposits are now forex liabilities. Okay. Yeah. So as long as their loan book is sound, which I think post dollarization, the banks have been much more cautious about lending. Yeah.
No, the banks are okay.
Yes, the banks are okay.
The banks are okay. The other point that I would add is certainly, because I think if you look at the total loans and advances, it's now closer to $1 billion. It used to be $4 billion. Yes. We now have a bigger economy. It should actually ideally be closer to $6-7 billion. So the currency board is actually good for banking because what it will do is a boom. There will be a loan boom from $1 billion, even if it gets back to $4 billion. I think going back to the politician, this is good because if banks can lend up to 4 billion, 5 billion, then that's good for the economy.
You should wear black more often because you're much more optimistic than you've ever been on this show. So yeah, black for you.
Okay.
I just want to say one last thing. Tinashe, do you mind one last thing?
Okay. Right. All right. Okay. You're gonna get me fired, but please.
So let's say you're an advisor to the president, and you tell him, Mr. President, there are two options for currency management going into your election 2023. Option one, you can have a market-determined exchange rate, which is unpredictable, which can be manipulated.
Lots of saboteurs and all sorts.
Or you can have guaranteed stability, where every single one of your citizens can access forex whenever they want. Mr. President, which of these two options would you like?
On that note, I think it's safe to say that we've made the case, or certainly Jimmy has made the case for currency board. We would love to hear what you think, and let's continue the conversation.
Yes, let's continue the conversation.
Thank you very much for coming.
Yeah, thank you so much for coming. I hope you enjoyed my selection.
Syrah is my favorite.
Ah, fantastic, fantastic. That's good to hear.
Well, there we go. Thank you, and see you next time.